Hello guys, glad to have you on board again. Today, let's take care of our SPX index, trying to make an intraday scenario. The context isn't really easy to trade at the moment. We can definitely see this. This is not the kind of stuff we're used to see in normal market behaviors. What we have in here is just like pretty much closer to what we had back then, so it's absolutely stupid. Just out of 4 or 5 days we've been up for 6%, straight line, not even a consolidation, stupid markets, very low quality technicals. What we've done is basically buying the shit. As you can see, the NASDAQ index is pretty much the top headliner right now, so we're buying the shit. The danger, we're buying risk. So this is hard to figure out. So the current context isn't easy. Knowing this, summer trading, hard to figure out context and stuff like that, it should lead you to a single conclusion. You should narrow the position sizing, reduce the risk. High level of uncertainty, and everyone can definitely feel this right now. No one really knows what the fuck is happening. So danger, increasing risks, you just lower the leverage. Make sure that even if you make lesser gains, you're taking less risks, and that's what you really need to do if you want to be long-term sustainable incoming from trading. I know it can be stupid. You'll say, oh, I'm not working to get pennies, but believe me, you'd rather like to earn pennies with low risk rather than risking to get hundreds of dollars, but long-term being negatively odd trading. So you don't want to be doing this. Higher risk, you just lower your risk taking. That's how it goes. You're being less aggressive, you're taking lesser, tinier position sizing to be able to move the stop loss if necessary. All right, you need to let some room for uncertainty when uncertainty on the opposite side is rising. So we always follow the same path, which means first step when we do intraday trading is that we have a look at the underlying cash structure. Yesterday has been an interesting session out of the intraday. So once again, this is not normal. We rarely have that kind of stuff. So straight line 5 days in a row, 5 days in a row, not even a consolidation, not even a catalyst to support price action. So it is not something that means something, all right? It's just stupid, and we're ranging. So it definitely is a range, it's volatile, and it's done on purpose. So what we're doing in here is that we try to put the bears out the table. We try to push them out. So what we do is that we do strong, we do straight line, we do no consolidation, we just send a message. You bears are fuckers, we want you out. That's exactly what Wall Street is trying to tell us. That doesn't even mean that the bears are wrong. All it says is that the bulls wants to prove us wrong. That's about all. That's definitely what happens in a range. So they sent the message. As a bear, I don't nearly give a fuck about what they tell me. What I care is what price tell me. So the price tell me I want you out. All right, I want you stop loss. So what I'm doing is that I'm putting my stop losses further away, and I'm just standing still and waiting because I don't nearly even think the bulls will manage to take it. All I think is that the bulls do anything they can, but in a range we'll have to trade both sides, and so the next time is probably going to be bearish. So that's what we wait for. Like we said on Discord, the problem is the 1 hour chart time frame is definitely unable to read. It's not even highlighting a single context to trade on, but the 4 hour chart does give us some information. We can clearly see the range structure I'm forecasting in the 4 hour chart time frame. This is the reason why I think 4 hour is our guideline. But remember what we said. When you do trade intraday, normally we do take care of the daily cash structure to figure out if there are some gaps, and we do still have one. But normally we're supposed to like circle around our scenario with a 1 hour chart time frame context, which we can't, because in here the 1 hour chart time frame is just as stupid as it could be. So we're going to have to do 4 hour context for intraday trades. Reason why, we're going to talk about this later. So first of all, first step, caching structure. So what the hell do we have? Did we let open gap down our feet? No, we didn't, but we just gapped up each and every fucking day. So 5 days in a row, up gaps, and the market just paid it out out every fucking time. All right, closing in here, opening there, closing higher, opening higher, closing higher, opening higher, closing higher, opening higher, closing higher. But still, something has been going wrong yesterday, as we do have a resistance building itself. We found something. All right, that doesn't even mean that we're going to be bearish today. All it says is that something shows up, that the bulls are losing strength after 5 fucking days of straight line bullishness with gaps and positive candle closes. So today we do have the first glimpse of, yes, finally as bears we might be able to do something, but at least today we're going to be able to trade. All right, this is stupid pricing, straight line bullishness, which is rare in a range, but still, I mean, the bulls want to send a message. I'll let them send the message. All I care is that this message is wrong. So what we have is this caching structure with a gap, open gap in here. It is not it's not an open gap. It's just a standard gap in which we closed the day higher and we opened at the lows the previous day, the day right after, and initiated the bearish trend. So what we have in here is a rupture gap. So this is the bearish movement consolidations guarantee, which means if we ever fill this gap, then there's no longer bearishness. All right, this is the kind of gap we don't fill. We don't need to fill this gap. It's just a guarantee for bearish. As long as we remain below this gap, I maintain my bearish bias on the weekly and daily scenarios, and H4 as well. So we should range, and normally we should keep this range open. But still, we do have a little bit of room to test the gap, get in the gap. We also have additional levels that I've been highlighting, previous levels that I've been rejecting in the daily charts, this one and this one, which gives us a cluster area between 29.12 to 29.18, which is a dense technical area in which things can happen because it previously caused huge reversals in the past. All right, so this is for the caching structure. Despite that, we've got intraday normal bullish gaps in there that we're probably going to act as support. So obviously, anytime we retrace to those gaps, you need to be aware that there will be some underlying support. So the first one is going to be in there. Right, technical level, let me just get it. It's another key level, 28.73, and this is another area. But if we ever go in there, you know that profit taking is obviously coming on the way. So these are the support area, 28.43, 28.73, and we're just gonna copy those levels to the SPX intraday charts. Oh, let's do it. All right, so we said 28.73. Let's do it, 28.73, oh my goodness, 28.73 is in here normally, if my memory is right. I'm not getting it, what a freaking fucker, 28.73, all right, and 28.40, oh my goodness, I have problem with my memories. What the hell is that? So we said 28, yes, in here, 28.43, 28.73, yeah, we're good. All right, so these are the two levels. Anytime we reach out to those supports is going to be a risk management for anyone who takes bearish trades. It's going to be a supportive area for whoever wants to buy the market. You have to pick up a side. Once again, on an intraday you can do both. That depends on you. I think this is more likely a selling area starting from 29.12. All right, this is the price in here, 29.12 to 29.18. All right, so this is the area in here. 29.18. So this is our cluster selling area. This is the 4-hour range selling context, so definitely a huge cluster in here. And what it says is that as we're not trading 1 hour, all right, 1 hour is not able to read. We're going to have to look for signals in there, obviously, but this is a 4-hour area, which means if you do take intraday trades in there, those who want to, that's not necessary, all right, will be able to handle those trades on swing perspectives. All right, you'll be able to hold those trades for swing trades. So if you sell in there, just let 25 or 50% open trades for a longer time frame perspective. That's what I'd recommend you to do. If you're a pure intraday trader, you don't nearly give a fuck. You try to sell in there and you'll secure the trade on each of those supports. If prices are pulling back to those supports, then you look out for bullish entries on shorter time frames. All right, the problem in here is that normally, remember what we said, the intraday building scenario process is you have a look at the caching structure, any gap, stuff like that, and then you go have a look at 1 hour time frame to just build the context, and you're going to trade upon this context. The problem is in here, this is not normal context. That doesn't happen. We've got a breakout in here, but we've got no accumulation. So this is not a normal behavior. So when it happens, you have to zoom out to the higher time frame, and this is where we can see something. This is definitely a ranging context, and we can see that the resistance is definitely in here. But instead of trading 1 hour context, we're trading 4 hour. So when you do this, all right, the only conclusion is that you're not going to take any 3-minute chart time frame. You're just basically shifting everything to the upside. Normally, you take a 1 hour context and you can trade 15-minute or 3-minute chart time frame for aggressive traders, signals to trade, all right? So as today, we're going to have to take care of a 4 hour context instead. Then you might want to take either 1 hour signals or 15-minute, but you definitely don't go along 3 minutes. All right? So that's how we're going to do stuff today. We're going to trade the 4 hour area with 1 hour or 15-minute signals. 1 hour for the low risk traders and beginners. You're simply going to get to fucking wait for us to get to trade this area and wait for a 1 hour signal. What you want is definitely not another taking profit. What you want is an exit, an overbought cluster, or anything like that, but you want a strong selling signal in this area, not a weak profit taking structure. All right? Those who are a little bit more aggressive, me included of course, you'll get down to the 15-minute chart time frame, and here we've got a picture, an interesting picture in which we can see the resistant context. We can barely see that this looks like a weird trend, but still looks like a trend in which we've got a strong breakout and bullishness. We start to diverge in here, and this is where we've got a pullback, pulling back to the support context. So what we might be trading in here is a weird, ugly, stupid trend. This is the pullback, all right? And we still have the final excess to make. So remember what the final excess rules are. You take your little piece of paper. Remember this one, you need to have this printed right next to your screen. Before pressing any fucking button, you need to make sure that you're fitting this decision-making process. So what is the context? It would be a weird trend. What is the maturity of this trend? I think at this stage we just passed pullback, which leads us with the final excess, which requires to be coming back to the resistant context, possibly with a framework breakout and normally a reversed signal, which means what we should do is sine wave breakup. We should see a cross signal or something like that close to the resistant context and having prices testing this area, and this will be our trading signal. Remember that final excesses, no beginners should trade that. Only experienced traders do take counter trend trades. So for the beginners, the 15-minute chart time frame, you definitely can't trade this. The current context isn't going to fit the plan for you. But still, there is something that you might be trading, but probably not just by tomorrow, is let's figure out that we eventually do what I said, all right? We go up there, we find the final excess signal. Professionals only and experienced trader can take this trade because it's risky and beginners don't really know how to manage that level of risk, right? We might have a pullback afterwards and build a range, which means we should get back to the support context, break it down, and reverse the context to some bearishness, all right? So the context boundaries, if everything goes according to my plan, should do this. We go up here, we go down, so we reverse the support context is going to act like that, all right? And the bearish context, the reverse in context is going to be doing something like that, all right? And prices should oscillate and pull back to the resistant context probably tomorrow. So this is the trade you want to take if you're a beginner. All right, do you really get that? I hope you understand that, because that's how price generally reverse. All right, so this is for speculative traders. I'm going to take this trade if a signal shows up. I'm going to risk manage my trade upon the support area, 50% profit taking or paying from a stop loss and whatever. All right, once this is cleared, there is probably going to be a reinforcement tomorrow for me, but this is going to be your entry prices tomorrow for those who want to be trading 15-minute signals. But normally, from what I know and what I think, this reversal area in here is very likely going to be triggering a 1-hour chart signal, which means beginners, what you're going to take is the 1-hour signal reversal we may have in here. So you're probably going to be selling today and let it go, all right? The trade is a 1 hour trade in a 4 hour range area, which means you take the trade, you secure the gains on out of the first support, which is 28.33, right? You have a first risk management normally on the 15-minute context in here, but what you're going to be doing is that you're going to reverse risk manage and partial profit take, all right? And entirely profit take to those who just don't want to take risk, partial profit take to those who want to play the range, the 4 hour range, and then you'll risk manage and target this area for your profit taking. All right? Are we clear on that? So it is an intraday in which you can try to be doing a little bit of swing trades. To those who want to, obviously, those who are pure intraday trader, you don't nearly give a fuck about that. The plan is simple. 1 hour signal, selling entry, risk management, profit taking, and that's it. All right? What you're going to be doing is that the 1 hour chart context is probably going to rise, all right? It's going to rise, and this is where you're going to match, all right? You're going to try selling in here. You're probably going to have a signal today. I don't know, but I highly anticipate that, right? You're going to risk manage in there, all right? Because you're going to have your trend channel is going to come up there, all right? So whenever you catch up on the trend channel is where you lower the stop loss, you eventually pay for the stop loss, or at least this is your first risk management. There's going to be another risk management in there, all right? For those who want to, this is the technical area we've highlighted on the cash structure, and otherwise you let it go. And normally you should catch up on the support context probably in here in a couple days, at least before the end of the week. Normally you should get to this area in which you profit take. This is your target, all right? If you're playing the range, then your target this area, but if you're playing just the intraday, what you have in here might be a bullish trend, so anytime you catch up on the support context, you get the fuck out. All right, I hope this is clear. If it's not, then obviously this is why you have Discord. You can get in Discord and ask questions to other members if there's anything you don't really understand about what I said today. And me and other users will be happy to answer your questions. So remember that whenever there is a doubt, doubt leads to bad decision making. So if you doubt about something, just ask someone else for help. This is why we've got a community. I remember that we've got probably one of the strongest community out here in Discord. We've got more than 5,000 users. So if you cannot find someone to help you out of 5,000 users, I will be pretty much surprised. Anyway, I'll be there, and if I see your question, if you ask your question and no one answers you after a few hours, then you can just mention me. You say @PhilRx, and you can be sure I'll be seeing this and answering you as soon as possible. All right? So bye guys, see you later, and I hope we're gonna have a trade today. So be patient. It's probably gonna be by this afternoon. As like we said, what we highlighted is a cash structure area, which means it has to be traded with a cash session. So whenever the US stock market is open for cash trading, we're probably gonna get to this area, wait for a signal, be really patient. Remember that if you're a beginner and if you try to be aggressive, you're definitely not gonna make it. So trade according to the plan, which means don't have a look at your fucking charts. Today, for a beginner, the process is freakingly easy. What you're going to be doing is going alert, all right? You're going to set an alert in here, and what you're going to be doing is you're going to set a range alert, all right? So what you want is this. You go there, you set framework, range alert, all right? And you just do this. It's really, really, really simple, all right? This is the only alert you have to set today. And you do this, you create your alert, and you get the fuck out. If you're a beginner, that's all you've got to do. If you're a little bit more experienced trader, what you're going to be doing is that you're going to go there and you're going to set an alert for framework as a trend final access. All right? It's simple. It's really, really, really simple. I'm working around new alert system, by the way, in which you're going to have risk management, trade management, alerts, which means if you take a trade on a final excess reversal trade, you're going to have risk management. So anyway, No, I shouldn't have talked about that. First of all, I'm going to code this thing. I'm going to have to backtest stuff, make sure it works fine. So it may require a couple more weeks, or even eventually a little bit more, because I'm going to have to take some holidays in between. So normally next month you should have this released. Obviously, we'll see each other again tomorrow. To make the first out of the scalping series. Tomorrow's one is going to be the first one about psychology. I'm going to explain you what is the necessary psychological state to be a scalper, what are the psychological problems that absolutely forbid you to scalp. So there are some profiles who will never ever be able to long-term safe scalp, and what we'll see is that the problem is this is the guys who mostly want to be scalpers who don't who simply can't make it. So I'll highlight this, I'll try to make it as clear as possible, but once again, and I said that already, I already said multiple times that some people will want to scalp as they just can't do it. So those guys will, I hope you'll understand the message tomorrow, all right? Because if you're among those guys and you want to go down scalping, then this is a rough path ahead, and it's probably going to lead you to bankruptcy, and that's really what I try to avoid in here. Anyway, see you tomorrow for further explanations.